Let's get to Tesla. There are so many bad headlines for this company. The chief of engineering takes a leave of absence. The investigation of the autopilot system after 3 crashes. Goldman Sachs says they need at least $10 billion through 2020. Our next guest is a Tesla cheerleader. Gene Munster is with us. And my obvious question is, after all those negative headlines, I think I've asked you this before, all those negative headlines, are you still a Tesla bull?
Well, we ask ourselves, should we stay bullish every day? And the answer is yes, we're still bullish here. So we're having a critical eye at this. But the reason why we're still optimistic, let's just take a couple of those headlines that you mentioned. The Goldman Sachs story that they're going to need $10 billion by 2020. What's implied in that is that they're going to run out of money. But that, in fact, is not the case. They can ramp from 100,000 car production today, which is kind of what they're at, to 1 million, just based on the infrastructure that they have. That $10 billion is for them to open a new factory to build a lower price SUV, and separately a factory in China to build batteries. So they can have a 10x bigger business without spending the $10 billion. So that's one piece. Okay. The autopilot, it's just understandable that politicians would be meddling in this just because it's good fodder for, I think, political gain. But at the end of the day is that it's very clear that when a car in autopilot is about 4 times less likely to get into an accident than one that doesn't have autopilot. So I think that we're still bullish.
Well, Gene, what they cannot afford under any circumstances is ongoing and continuing production problems with the Model 3. Because if they can't produce to a certain level, they can't get the revenue, and they really will run out of money.
That's true, if they can't fix the production problem. So last week, the Model 3 production line shut down, which, again, that sounds bad. We've talked about this in the past. But in order to improve the line, they have to shut it down to make changes to the manufacturing. They're starting to implement something called nesting, which isn't worth the time to get into now, but it's kind of a next-level production methodology. And so I think that they are doing the right steps by going slow at first, but eventually they're going to get to a speed that's going to allow Model 3 to ramp, and at that point, I think we're in the clear.
By the way, as you were speaking, Tesla stock dropped below what I'm told is a key critical level, $280 a share, dropped down to $279. It wasn't your fault, Gene. Don't worry. Don't worry. Now, $279.68 is where we are now. I do want to talk to you about Apple. We've got a big investment firm says that Apple's services growth will likely stall this year. That would not be good news. You're a big Apple fan. Are you still cheering Apple on?
We think that there's a shift, and I'm going to talk about services quickly in a second here, but there's a paradigm shift going on into how investors. Now, this note out today is kind of the old paradigm way of thinking about it, but the new paradigm is more of a belief that the iPhone is going to be stable and services business stable as well. So, and this big cash return piece, and we call that theme Apple as a service, more broadly, even a hardware service. But I want to just quickly address the concern about their services growth. Services grew 31% in the March quarter. It grew 22% in the December 17 quarter, so it had this big step up. And what that note today is saying is that they expect it to decelerate back to 18 or 20%. That's exactly what investors are thinking. The reason why it jumped is they had a one-time licensing gain for search within Google paid them a licensing fee to allow Google Browser to be used on iOS devices. And so my point is that, yes, it's going to slow down, but it's going to slow down to the same level. And here's the real kicker. Services has been around for 10 years, and that growth has been between 18 and 22%, excluding some of these one-time benefits over those 10 years. And it's just going to settle right back into that kind of 18 to 22% range.
If you ever change your tune on Tesla or Apple, it will be really big news. And I want you to do it on this program, because you really would move the market. You got it.
I would love to do that, Stuart.
If and when it happens, you're on this show to do it.
Yep, we're not there yet. We're still believers here, just to be clear.
Just to be very clear. Gene Munster, thank you very much, sir. We appreciate it. See you soon.
Thank you.